All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Monday, everybody. Today is July 28th, 2028. And the top story this morning is the trade deal between the United States and the European Union. This was a big one. It was announced yesterday morning. The long of it is, guys, or the long story short, 15% tariffs. That's what we got between the U.S. and Europe. Significantly lower than some of the numbers that had been thrown around. There's a lot of commentary back and forth on both sides, political posturing and things like that. Generally speaking, I've seen a lot of criticism from the Europeans saying they had wished their leaders had held out for a better deal. They viewed it as acquiescing and surrendering. Maybe a little bit of that. Honestly, the Europeans did as well as I could have expected them to do. They didn't really have a whole lot of leverage in this situation. Europe's kind of painted itself into a corner with its policy over the last few years that have gutted their manufacturing base and their energy infrastructure. That being said, the high-level stuff, 15% tariffs on European exports to the United States. Europeans have also agreed to buy $750 billion of U.S. energy, something they were probably going to buy anyway, but hey, let's tack it on and make it another talking point in the trade deal. Why not? Also, an undisclosed amount of arms, weapons that the Europeans are going to buy. Again, something they were probably going to do anyway. We've seen a lot of announcements over the last couple of weeks about the Europeans buying U.S. missiles to give to the Ukrainians. So I'm not too surprised to see energy and arms included in that deal. Again, that's stuff that was probably going to happen anyway. But at the very least, the market is interpreting this as a bullish signal. Things aren't going to get worse, right? It could have been a lot worse. And since the market was pricing in the possibility of 35, 40% tariffs or whatever the number was they were throwing around a few weeks ago, 15% is preferable to that. So it's being viewed as a win for markets this morning. We've also got the U.S. and China are in talks in Sweden as we speak on the possibility of extending that mid-August deadline once again. This is the third such meeting going on between He Lifeng, the Chinese vice premier, and Secretary Bessent, U.S. trade representative, and this Treasury secretary. They're talking about extending this deadline again. And this comes right as we're getting a report from the Financial Times last night that the United States is freezing export controls. Now, I'm not sure how to interpret that, if we're withdrawing the current export controls or if we're just not going to put any new ones in place. But this is almost certainly part of these ongoing trade talks. The two big sticking points on our side, it's export controls. We don't want to sell advanced AI chips to China. On the Chinese side, it's rare earths. They don't want to sell rare earths to us. So whatever deal finally gets agreed upon is probably going to be one for the other. So at the very least, they're talking right now. We've also got a story about talks ongoing with the South Koreans about possibly leveraging their shipbuilding capacity as a way to sweeten a trade deal with the United States. South Korea, I'm just learning this today. Apparently, they are the second largest shipbuilder in the world. They have a very advanced industry, second only to China, of course, who has been completely eating our lunch in shipbuilding for decades now. Look, the U.S. has a real shipbuilding problem. Our last few big Navy acquisition projects, Ford-class carriers, the new nuclear submarines that we're building in Groton, the Constellation-class frigate, the littoral combat ship, they were all procurement CFs, way over budget, way behind schedule. The United States has just forgotten how to build ships. And so the South Koreans are hoping to leverage their prowess as shipbuilders to try to maybe make some deals to modernize U.S. shipyards, also maybe use some of their own shipyards for U.S. Navy contracts. I'm not sure what the final deal would look like, but that is in the works. So we'll probably hear more about that in the coming days. And of course, all of these trade deals and possibilities of trade deals and negotiations are all happening with the backdrop of a massive week that is ahead of us. There's a lot of big data points and a lot of big earnings releases that are coming out this week. First and foremost, the FOMC, Federal Open Market Committee, aka the Fed meeting and their interest rate decision, that's on Wednesday. That's going to be a big one. The Fed is largely expected to do nothing. No surprises there. The big question is, what are they going to say? There's obviously going to be a lot of silly political pandering about Fed independence and say something bad about Mr. Orange so we can run a headline with it. But then the question is, what are you guys going to do in the fall? Are you going to cut? Are you not going to cut? Market is looking for some clues about what the Fed may do in subsequent meetings. That's on Wednesday. Also on Wednesday, we've got Microsoft and Meta earnings. There's a couple $1 trillion worth of market cap there. Big questions from those two. What is their CapEx going to do in the coming quarter, in the coming year? Google surprised a lot of people by increasing their CapEx during their earnings release last week. Will we see something similar for Meta and Microsoft? If so, very bullish for NVIDIA. If not, not so bullish for NVIDIA. We've also got the Treasury's quarterly refunding announcement on Wednesday. How much money the government is going to borrow and what duration. That's a big one. Keep in mind, Secretary Bessent has been leaning heavily on the issuance of more short-term debt versus more long-term debt. That's kind of a quasi-yield curve control, what they're doing to try to suppress those long-term borrowing rates. But at the same time, Secretary Bessent really needs to term out U.S. government debt. He needs to stop leaning on the short-term stuff that rolls over all the time, and he needs to borrow long-term, 10 years, 20 years, 30 years. But he needs those interest rates lower in order to do that. And, well, he's finding that that's easier said than done, as did my girl Janet during her tenure at the Treasury as well. That's all Wednesday. Oh, yeah, we got GDP numbers coming out this week. We got PCE, personal consumption expenditures, the Fed's preferred gauge of inflation. That's coming out this week. We got JOLTS coming out this week. On Thursday, we've got Apple and Amazon earnings. There's a few trillion more in market cap. See also earlier discussion about CapEx plans, especially with Amazon. How much are they going to be spending on data centers? And that's all leading up to Friday when we have earnings from the oil majors, Exxon and Chevron, but more importantly, non-farm payrolls. The jobs number coming out on Friday. Guys, we have got a loaded week ahead of us. That jobs number was pretty good last month. Will we see a repeat of that, or will those much anticipated federal government job cuts finally start showing up in the NFPs? It's going to be a lot to talk about this week, guys. Big week ahead. Now, also going on this morning, we've got Samsung and Tesla have signed a $16.5 billion deal to make Tesla's AI chips for self-driving cars. And hey, they're going to be making them in Texas. Oh, what do you know? Somebody's actually making chips in the United States. Yeah, but that Samsung facility, it's not actually built yet. They haven't finished it, so they won't start until next year. But hey, AI chips being made in the States, that's a good thing. It's a $16.5 billion deal. Samsung really needed a win because they've been having a hard time securing contracts for that foundry they've been trying to build here in Texas. And, well, Taiwan Semiconductor has been eating their lunch. Losses in the foundry segment has been a big problem for Samsung over the last couple of months. And last but not least, we got an interesting story out of China this morning. They are rolling out a 3,600 yuan per year per child subsidy for childcare for all kids under the age of 3. And that's a lot of yuan, 3,600 yuan. Actually, it's only about $42 a month, which, you know, good luck. You're going to raise a kid with $42 a month. Look, this is another step of the Chinese government, number one, to try to stimulate consumption. It's a form of helicopter money. But number two, more importantly, they are trying to arrest the decline of their birth rate. Keep in mind, it's only been a couple of years since China even legalized a second child. And then a few years after they legalized a second child, they legalized a third child. Now they're subsidizing all 3 kids. And still the Chinese birth rate has been cut in half in just the last 10 years. China can read the writing on the wall. There is a population demographic collapse on the horizon in that country, as well as places like Japan. South Korea is even worse. Europe and the United States not far behind. Things aren't so good there either, partially offset by immigration. The Northern Hemisphere seems to have forgotten how to make babies. Guys, maybe younger couples, you want to get in on that? You guys, you are familiar with the procedure? Just saying. Science has figured out how that works. I just throw it out there. You guys do what you want with it. We got a lot to talk about today. Why don't we shrink my big melon of a head and let's see what's going on in markets. And this is when I usually say, don't forget that like button and that subscribe button for the YouTube algorithm. If you're new here, come on back tomorrow. Have your coffee with the melon heads as we go through markets. Right now, the S&P 500, it's positive, but man, it's just barely positive. We've been slowly bleeding out those gains all morning. Currently just 8 points to the upside. That seems to have accelerated in the last 15 minutes or so. I don't know what happened at 9 a.m. that seems to have sped up the selling here. Let me just see if there was any economic data came out at 9 a.m. There was not. So I'm not sure what has caused that little bit of a sell-off there, but we will keep an eye on that. For now, the market's still positive, though. The Dow has gone into the red, down 3 points, 0.01% to the downside, now giving up all of its gains. It was up a couple of hundred points pre-market on enthusiasm for that European deal. And the NASDAQ, though, still positive, 55 points to the upside, about 0.25%. Again, though, that's selling in the last 15 minutes. I'm not sure what's going on there, guys. Let me know in the chat what you think caused that selling that started around 9 a.m. That one's kind of jumped out at me here. Looking over at the U.S. dollar, it is stronger this morning, 53 basis points to the upside, about 0.5%. We are seeing some weakness in the euro this morning, almost certainly on the heels of that trade deal, and a little bit of weakness in the yen. That's driving the Dixie a little bit higher. Looking over at the government bonds here, we've got 30-year Treasury, 4.948%. That's higher by just under 2 basis points this morning. The 10-year is at 4.406, also higher by 2 basis points. The 2 years at 3.928, that's higher by a point and change. And the 1 month is down by about 0.5 point at 4.326%. Looking over at commodities, we got a little bit of red in metals, a little bit of green in energy here. Gold is down by about $8 here, $3,329 for gold. That's off by about 0.25% this morning. Silver, meanwhile, is at $38.13. That's down a couple of pennies here, 3 cents lower or 0.09%. And that's on the heels of a pretty rough day on Friday. Mr. Slammy finally showed up. We've all been wondering where he's been. Silver sold off almost $1 on Friday, adding a couple of cents to that. But you know what? $38, I still like the shiny. Platinum, meanwhile, is higher by 1.7%. Palladium is higher by 3.3%. The PGM metals continue to rally a little bit here. Crude oil, meanwhile, is higher by 2.7%, $66.92 for September WTI futures. We do have the JMMC, or the Joint Ministerial Marketing Committee, or whatever it's called, for OPEC is going on today. They're not expected to make any changes to oil output at this meeting, but that could possibly move oil prices if something unexpected happens there. Looking over at Bitcoin, it's currently at $118,668 as priced on Coinbase. Bitcoin had a really rough day on Friday. We had a big sell-off, especially Friday morning. We went under 115,000 very briefly, and then over the course of the weekend, we clawed those back. We touched 120,000 yesterday. We're now off those levels here, but still kind of just bouncing around where we've been for the last 2 or 3 weeks. All right, let's talk about the big one this morning. The U.S. and the EU have averted a trade war with a 15% tariff deal. There is President Trump and EU President Ursula von der Leyen shaking hands yesterday in Scotland. The U.S. struck a framework trade agreement with the European Union on Sunday, imposing a 15% import tariff on most EU goods. That is half the threatened rate, and averting a bigger trade war between the two allies that account for almost a third of global trade. U.S. President Trump and European Commission President Ursula von der Leyen announced the deal at Trump's luxury golf course in Western Scotland after an hour-long meeting that pushed the hard-fought deal over the line following months of negotiations. I think this is the biggest deal ever made, Trump told reporters, lauding EU plans to invest some $600 billion in the United States and dramatically increase its purchases of U.S. energy and military equipment. Trump said the deal, which tops $550 billion signed with Japan last week, would expand ties between the transatlantic powers after years of what he called unfair treatment of U.S. exporters. Von der Leyen, describing Trump as a tough negotiator, said the 15% tariff applied across the board, later telling reporters that it was the best we could get. We have a trade deal between the two largest economies in the world, and it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. The deal, which Trump said calls for $750 billion of EU purchases of U.S. energy in the coming years, and hundreds of billions of dollars for arms purchases likely spells good news for a host of EU companies, including Airbus, Mercedes-Benz, Novo Nordisk, if all the details hold. Again, the EU energy and buying the energy and buying the weapons is something they were probably going to do anyway. That being said, one company that was moving this morning, we've got Cheniere Energy, ticker LNG, up by about 3.8% here. Let's see if it probably gave back. It's up 4% this morning. I don't have any position in this name. I used to hold this one a few years ago. But this is probably one of the companies that would benefit from those additional sales of LNG, assuming that actually comes to fruition. So that one's up a couple of percent this morning. Meanwhile, we've got more talk in the trade war, but this time between the U.S. and China. They are meeting in Sweden to extend the trade truce. So is this another taco or is this just another delay? I don't know. U.S. and Chinese officials are meeting Monday to extend their tariff détente beyond a mid-August deadline and haggle over other ways to further diffuse trade tensions. Chinese Vice Premier He Lifeng and U.S. Treasury Secretary Scott Bessent will lead the delegations through Tuesday in Stockholm, their third meeting in less than 3 months. The agenda includes discussions about how long the current tariff truce can be extended, as well as U.S. levies tied to fentanyl trafficking and Chinese purchases of sanctioned Russian and Iranian oil. The meeting comes as the U.S. races against an August 1st deadline to conclude trade deals with dozens of countries, which should provide more certainty to companies about what levies they'll face when exporting to the U.S. Talks with Beijing are on a different track, with rates for China well above those for other nations, making bilateral trade much more expensive. At the heart of the haggling between the world's largest economies is Beijing's stranglehold on rare earth magnets used to make everything from electric vehicles to high-tech weapons, and Washington's curbs on cutting-edge chips essential to AI. The battle over export controls has become a critical component of trade talks. And along those lines of the trade talks and the critical components here, we've got this one in Reuters this morning. Trump pauses export controls to bolster China trade deal, Financial Times says. This article broke late last night. The U.S. has paused curbs on tech exports to China to avoid disrupting trade talks with Beijing and support President Trump's efforts to secure a meeting with President Xi Jinping this year, the Financial Times said on Monday. The Industry and Security Bureau of the Commerce Department, which oversees export controls, has been told in recent months to avoid tough moves on China, the newspaper said, citing current and former officials. Tech giant NVIDIA said this month it would resume sales of its H20 graphics processing units to China, reversing an export curb the Trump administration imposed in April to keep advanced AI chips out of the hands of Chinese over national security concerns. That move ended up costing NVIDIA about $5 billion worth of worthless H20 inventory on their last earnings report. The planned resumption was part of U.S. negotiations on rare earths and magnets, Commerce Secretary Howard Lutnick has said. The paper said 20 security experts and former officials, including former U.S. Deputy National Security Advisor Matt Pottinger, will write on Monday to Lutnick to voice concern. However, this move represents a strategic misstep that endangers the United States' economic and military edge in artificial intelligence, they will write in the letter. So apparently a strongly worded letter is coming from somebody today. Meanwhile, we've got more movement in the trade front this morning. South Korea seeks to leverage Trump's focus on shipbuilding in tariff talks. Now, this could potentially be a big deal, guys. Shipbuilding is a major disadvantage for the United States. The Chinese have a 350 to 1 advantage in shipbuilding capacity. For every one boat we can put in the water, the Chinese can put 350 in the water. All right. That is not a disadvantage. All right. That is like we don't even show up as a blip on the radar when it comes to building boats. Our boats are better, but they can build them faster. South Korea and the United States have been discussing a shipbuilding tie-up that could include investments to modernize U.S. shipyards and more help to repair the U.S. naval fleet as Seoul seeks better tariff terms, government and industry sources said. U.S. President Donald Trump, who has made revitalizing the aging U.S. shipbuilding industry a priority to keep up with China, has repeatedly raised the idea of cooperating with South Korea's cutting-edge shipbuilding industry. After investing billions of dollars in shipbuilding capacity, China is the world's biggest shipbuilder. It also has the world's largest maritime fighting force, operating 234 warships, to the U.S. Navy's 219, according to the Center for Strategic and International Studies. That statistic is a little misleading. Most of China's fleet is very small coastal patrol boats, nowhere near the size of U.S. Navy ships like our destroyers and our cruisers, certainly not aircraft carriers. In terms of total tonnage, the U.S. still has a huge advantage in ships, but the Chinese are closing that gap real freaking fast. South Korea can use shipbuilding as leverage to gain some advantage in tariff negotiations, said Kim Suk-kyun, a former commissioner of the Korea Coast Guard and an expert on maritime strategy. Pressure on Seoul to reach a deal on import tariffs has increased after Japan struck a trade agreement with the U.S. this week. South Korean officials are in Washington for trade talks, though, on high-level meetings due on Friday was postponed over scheduling. South Korea is the world's second largest shipbuilder, and a source with direct knowledge of the talks said any partnership should include South Korean companies investing in the U.S. and helping more in repair and maintenance. South Korea's proposal of a Korea-U.S. manufacturing renaissance partnership in areas such as shipbuilding had drawn strong U.S. interest as Washington called for joint efforts to counter China's shipbuilding growth, Seoul trade officials said, declining to be named as they were not authorized to speak to the media. So hopefully we're going to start building some big, beautiful ships pretty soon. We're going to have to figure that one out sooner or later. Meanwhile, we've got a big week ahead of us, guys. A flood of economic data is coming. Pay attention to the unemployment rate. That's obviously the big one this week. Big tech earnings are going to move stocks, but the non-farm payrolls is probably the single biggest thing happening this week. But there's something else in this article that I wanted to draw your attention to. Holy macro, the coming week sets up to be among the busiest in memory for economic news, with such key events as the Federal Open Market Committee meeting, release of the monthly jobs data, the August 1st tariff deadlines, plus there will be estimates for GDP and employment costs for the second quarter, the release of June's measure of the personal consumption expenditures price index, the Federal Reserve's favored inflation gauge, and the Treasury's latest borrowing plans. Center stage will be the FOMC's policy decision on Wednesday. Forgive the repetition, but what will matter is what the panel says, since it is certain to do nothing to its federal funds target range of 4.25% to 4.5%. That's despite President Trump's barrage of calls for rate cuts, which culminated in his trip to the Fed on Thursday, which was hilarious, by the way, ostensibly to inspect the renovation of the central bank's headquarters. Trump admitted the much ballyhooed cost overruns didn't provide cause to fire Fed Chair Powell and reiterated that his main focus was to get rates down. One topic not likely to be discussed by the FOMC is money. 4+ decades ago, money supply was the big number the markets followed, but it fell out of fashion. Yet a massive surge in the M2 measure in 2020 and 2021 from the Fed stimulus was followed by the worst inflation since the 1980s, Jim Reed, Deutsche Bank's head of macro and thematic research, pointed out in his ever-useful chart of the day missive. Go figure, when you print money, you end up with inflation. Shocking, I know. A subsequent sharp contraction in M2 didn't cause a recession. Yes, it did. However, just the failure of Silicon Valley Bank in 2023 as money growth merely returned to its long-term trend. Fast forward to 2025, and U.S. M2 is growing notably again at 4.5% year over year, the highest rate since July of 2022, Reed writes. The 3-month annualized rate is even stronger at 6.9%. That's the highest since February of 2022. So there's a clear hint that we may be turning up again, especially when looking at short-term momentum in 3- and 6-month annualized numbers. That doesn't suggest overly tight monetary policy. And I just want to say congratulations to this guy on Deutsche Bank and to Barron's, who finally have caught up to this nobody YouTuber who operates out of the corner of his house in Southeast Pennsylvania, and noticing that for some reason the freaking money supply has grown by $1.5 trillion in the last year and a half, even though the Federal Reserve keeps telling us monetary conditions are tight. So it's great that you guys are finally getting around to noticing this. I've been pounding the table on it for freaking months. Where did all of this money come from? $20.55 trillion in October of 2023 to $22 trillion today. That is about $1.5 trillion of new money has just been lent into existence in the last year. So finally, somebody is noticing that. You know, we're all talking about rate cuts, about making monetary policy easier. the money supply is at an all-time high. And money supply being at an all-time high, that is what caused that inflation problem. I'm just throwing that out there. But, hey, whatever. They're going to inflate again. I'm sure it's going to be great. There's just not enough gold in the world for what's coming, guys. Meanwhile, we've got the Treasury is playing it safe on debt sales, and Wall Street is divided on its strategy. Secretary Bessent is doing exactly what Secretary Yellen did, over-relying on short-term debt. Wall Street expects Treasury Secretary Bessent to keep the size of key U.S. debt unchanged at Wednesday's refunding announcement, but a division has emerged among strategists about Treasury's master plan in the coming year. Treasury issues debt to fund the U.S. government, and the structuring of this debt is perhaps the most powerful tool in Bessent's arsenal. A decision to boost longer-term debt at the wrong time could shoot up yields, which could raise rates on mortgages, credit cards, and debt around the world at a time when consumers are already bruised from inflation. On Monday, the Treasury will issue a forecast of how many billions it expects to borrow in the current quarter. It will follow that up with details on how it plans to structure the debt on Wednesday. That's that quarterly refunding announcement that we get on Wednesday. Coupon sizes, think 10, 20, and 30-year bonds, are expected to remain unchanged, in keeping with the strategy Treasury employed all of this year and in much of 2024 under former Secretary Janet Yellen. Now, you'll notice here in this grid, they're showing how many billions of each duration in debt that the government has been issuing. And you'll notice the 2-year, the 3-year, the 5-year, those numbers are a lot bigger than the 10s, the 20s, and the 30s. We are relying more on cheaper short-term interest. Of course, that causes all kinds of other problems. This is the way the government kind of manipulates interest rates, by issuing more of that short-term debt. But that also causes problems in the long run. Sooner or later, the government is going to have to issue more of those 10s, 20s, and 30s. Although if you increase the supply of something and demand doesn't increase with it, then the price goes down. And remember, with bonds, the price and the interest rate are inversely correlated, which means that will drive interest rates higher, which could cause more problems in the housing market and the auto market. Secretary Bessent is kind of stuck here. He's got to term out the U.S. government debt. He's got to issue more long-term borrowing, but he can't without causing problems. That's something Janet Yellen struggled with, and now he's struggling with. Turns out running the country's finances is really hard. Go figure. Meanwhile, Samsung is making a deal with Tesla. They're going to make AI chips in a multi-year Texas deal. Chips going to be made in the U.S. finally. Samsung will produce AI semiconductors for Tesla in a new $16.5 billion pact that marks a win for its underperforming foundry division. South Korea's largest company announced on Monday that it will secure a $22.8 trillion won chipmaking agreement, which will run through the end of 2033. The plan is for an upcoming plant in Taylor, Texas, to produce Tesla's next-generation AI-6 chip. Tesla chief Elon Musk said on X, confirming a Bloomberg News report, "I wonder, could this deal be related to these ongoing talks with the South Koreans about shipbuilding and the trade agreement? I'm sure Samsung is going to play some role in that." Samsung's sold traded shares rose 6.8% to their highest since September, while suppliers like SoulBrain jumped 16%. A Samsung spokesperson declined to comment. "Of course, the strategic importance of this is hard to overstate," Elon wrote on X. He described the value of the deal announced by Samsung as just the bare minimum. Actual output is likely to be several times higher. The contract win, the first after Executive Chairman J.Y. Lee has been cleared of all outstanding legal charges, comes as Samsung has been steadily losing ground in chip manufacturing. The company, which makes its own memory chips and also fabricates semiconductors on behalf of clients, has had difficulty bringing in enough orders to fully utilize its foundry capacity. It has postponed completion of construction and operational ramp-up of its new Texas fab to 2026. And that Texas fab will be what makes these new Tesla chips. So look, Samsung's having a good morning here, up 6.8% on this news. This is priced in Korean won, 70,400 won for Samsung shares. But we've also got Tesla stock is up a little bit. Let's refresh this and get an accurate mark now that the opening bell has rung. $316 for Tesla shares, basically unchanged on the morning. We were up about 1.5% on this one before the opening bell. And the last one of the day, they are subsidizing babies in China Once again here, China rolls out childcare subsidy to boost the birth rate. Good luck with that one. China announced that it will start handing out childcare subsidies across the nation in its latest push to boost birth rates after a worrying drop in recent years. The government will spend 3,600 yuan, that's about $502 a year per child under the age of 3, according to the official Xinhua news agency. That's about $42 a month. I don't know. Oh, hey, honey, $42 a month. Let's go make a baby. Yeah, I'm not sure that's really going to sway any decision making, but it's not going to hurt. The assistance, effective retrospectively from January 1st this year and available regardless of the first, second, or third child, is meant as an incentive for young couples wary of rising costs of child rearing. And this is just kind of crazy here. Like this subsidy is available for first, second, or third child. Keep in mind, 10 years ago, a second child wasn't even legal. And then 2 or 3 years ago, a third child wasn't even legal. Now, fast forward, we've got this population collapse, and they're subsidizing all 3 of the kids. You know, maybe China should just get out of the baby business entirely. Maybe just like let people have however many kids as they want. Wow, what a concept. Let people make their own decisions. I know, crazy. I'll see myself out. I don't know what I was thinking. The policy is expected to benefit more than 20 million families each year, Xinhua reported. China has previously offered tax breaks and has been working to offer more affordable daycare services. The latest measure follows China's population shrinking for a third straight year in 2024. New births at 9.54 million last year was only half of the 18.8 million registered in 2016 when China lifted its one-child policy. Guys, take a second and appreciate just how terrible that sentence is. All right. In 2016, they finally made it legal to have a second kid. All right. China's silly one-child policy, right? They have this, great leap forward. We're all going to make steel instead of growing food. And then, shocker, 60 million people starved to death. And then we have this cultural revolution where we just beat to death anybody who says anything bad about dear leader. Go figure, all of a sudden they're like, everybody's starving. I know, no one's allowed to have kids. That'll solve the starvation problem. Now you've got a demographic collapse and they're like, quick, let's make it legal to have a second kid. Well, too little, too late. Look at what has happened in this country to the birth rate from 9.54 million, from 18.8 million in 2016 to 9.54. You guys, it's too late. I mean, it's already too late to reverse this population decline. Some of the projections I've seen show China's population will be cut in half by the end of this century. And look, I mean, even they changed the policy. They made it legal in 2016 to have a second kid, and still the birth rate was cut in half. By the way, South Korea is even worse. Japan is pretty close. The United States and Europe is pretty close. Guys, we better start figuring out a way to make more babies. And look, what's the problem? I mean, the problem is central banks. The problem is overreaching governments, just making too many decisions on behalf of everybody. They mess things up when they do that. Leave people the hell alone. And look, this is going to be a big problem, right? You've got entire cities worth of people in China, or entire cities worth of buildings in China that nobody lives in. Now what happens when the population gets cut in half? That sure as heck isn't going to increase the demand for those empty buildings, that's for sure. So they made their bed. They're going to have to sleep in it. I don't know how you reverse a trend like this, but they better figure something out pretty fast. And I just want to say thank you so much to the Pasta Man who says, remember all that chat about intellectual property? Oh, yeah, the intellectual property. Yes, IP. Chinese take what they want when they want. All right. There's no such thing as U.S. intellectual property in that country. All right. And look, you invent something in the United States, you spend your life designing and engineering and perfecting a product. You finally get it right. You take it to market. And a week later, some a-hole in China has an exact copy of it that he's selling without giving you one dime. Chinese government won't do anything about it. They actually encourage it. Our government certainly not doing anything. It's a good point, Pasta Man. And all this talk about fentanyl and all this talk about rare earth magnets and AI export controls, nothing about intellectual property. Not even on the table. Go figure. Thank you, Pasta Man, for supporting the channel, sir. He's back again. He says, yes, I was just going to mention this. Shark Tank O'Leary praised the e-China talks as a way to create essential IP protections. That has gone the way of the Doge cuts, SMH. By the way, Mr. O'Leary, he's been one of the most outspoken critics. I mean, he's been talking about how like half of the products that he bought on Shark Tank are the companies he took a stake in. As soon as they get up and running, Wish.com or Temu or whoever has an exact replica of it. They just take it. They just steal it. And you have no recourse in China. An American company going into Chinese court and be like, hey, they stole my idea. They're going to laugh you right out of court. That being said, Kevin O'Leary, Mr. FTX, not the biggest fan of his, to be honest with you. I think he was smart enough to know what Sam Bankman-Fried was doing, and he endorsed them anyway. And if he's not smart enough to know and he signed that big promotion deal with them, then maybe he's not as sharp as he sells himself as online. Either way, I am not the president of the Mr. Wonderful fan club these days. And that sucks because I used to be a big fan of his. I used to be, but FTX really rubbed me the wrong way. Thanks again, Pasta Man, for supporting the channel. Steve Woida says, overlay the NASDAQ S&P 500 over the M2 money supply. You think there might be a correlation? Gee, you think? Even more fun than that, Steve. And you're right, by the way. Like, go figure, there's more money out there chasing assets. Assets go higher. Wow, isn't that crazy? Also, remember that chart I showed on the Friday live show about over $1 trillion worth of margin accounts propping up stock valuations? Yeah, it's just leverage, guys. It's not value. These companies aren't earning much more money. And earnings have been okay so far this quarter, but they haven't been great. It's just dollar debasement. And another fun thought exercise, take that M2 chart and overlay it with Cathie Wood's ARK ETF. That's freaking hilarious, right? They put the silly fake glasses on her and they trot her out on CNBC to talk about her innovative disruptors and all this. All it is a chart of easy money. Congratulations. You make money when the Fed prints it, right? Like everybody does. Thank you very much, Steve. That is a good point, sir. Pigo's Trading Desk says, plot twist, tariffs are stealth QE. Yellen time. Tariffs are stealth QE. I'm having a hard time figuring that one out, Pigo. I'm thinking in my head, all right, QE, expansion of the money supply. Honestly, unless they're going to be just paying for the tariffs with leverage, unless they're going to be like, moving further out on the limb and making bigger and bigger loans in order to pay for the tariffs, then maybe it could be considered a stealth QE. I'm not sure how you get there. Shoot me an email, Pigo, or send me a DM on Twitter. Let me know what your logic is for that one. I'll be honest with you, I'm not really sure how you get there. We're going to have to put that one in the parking lot. Thank you, Pigo. Appreciate the super chat, sir. Clueless Panther, what's going on, Clueless? He says America needs one home policy. Everyone should have the opportunity to buy one affordable home, and no corporation can buy more than one house. I'll be honest with you, Clueless, I don't like it. I appreciate the support of the channel. I am no big fan of corporations buying houses. All right, let me just say that. Here's the thing, though. That business doesn't scale. All right, BlackRock being a landlord, like anybody who's ever been a landlord, the hot water heater breaks in the middle of the night, the phone call, you got to drop everything you're doing and go fix it. There is no way you can run that from a central office for houses all over the place. You got to go take a look at the stuff. You're in and out of there all the time. You got tenants that destroy the house. And I'll be honest with you, I don't think BlackRock is going to make money. And by the way, it's not really BlackRock that's buying the homes. It's Blackstone. A lot of people tend to say, oh, BlackRock's buying all the houses. Not really. It's Blackstone is doing it. BlackRock may be lending them the money. But here's the thing. They're going to get wiped out. They're going to lose money. All these corporations that are buying huge swaths of BTRs, build to rents, or buying entire neighborhoods, they're not landlords. They don't know how to do that. The problem is when their businesses fail, the Federal Reserve or the government is going to come in and subsidize them. That's the problem. All right. Let them buy these houses and let them lose money on them, and then let them sell the houses at a discount rate, and then let young homeowners come in and buy them up for pennies on the dollar because BlackRock didn't know what the heck they were doing, or Blackstone didn't know what the heck they were doing when they bought the whole neighborhood. And then let the young people who are currently priced out of the housing market be the beneficiaries when that business model flops. And it will flop. See also what Zillow did. See also how WeWork flopped. These businesses don't scale. The problem is the government is going to step in and bail them out. That's how you fix this. Don't bail out the corporate landlords who are going to flop. Let them fail, and then let responsible homeowners buy their assets on the cheap. That's better than coming in and saying everybody's only allowed to have one house. All right. See also what happened with the Chinese. When the government comes in and establishes arbitrary limits and just messes with the market, the law of unintended consequences takes over and things break elsewhere. So I'm not a big fan of more government involvement, but I think less government involvement will get you the same result, lower home prices. Thank you, Clueless Panther, for supporting the channel, sir. Russ, the beekeeper, what's going on, Russ? He says, China out of the baby business like the U.S. is out of the healthcare and retirement business. That'll be the day. Yeah, you know, don't you just love it when they make things affordable? Things like healthcare, things like college. Man, boy, am I glad they made those things affordable in the United States. See also my earlier comment about how less government involvement is the solution, not more. Every time the government says they're going to make something affordable, shockingly, it seems to get more expensive. Just maybe less government involvement. Just take it for a test drive. You might like it. Give it a whirl. If you don't like it, you can go right back to your big Keynesian government overreach utopia. Hey, I just throw them out there. Thank you very much to Mr. Russ. Appreciate the support of the channel, sir. Break My Wallet Motorsports says, high interest rates will keep investors out of real estate. Cap rate creates high opportunity costs. Well, let me just say interest rates are high right now as compared to 2021, 2022, sure, but zoom out on that chart. Interest rates aren't really high. Actually, if you zoom out on the chart, throughout history, almost all of it has been higher than today's interest rates. So the only reason interest rates are considered high right now is because these asset prices are so ridiculously overinflated. I don't think the solution is lower rates. I think the solution is lower asset prices. And in order to get lower asset prices, you got to stop the freaking bailouts. Every time price discovery shows up, the government steps in and prints money, buys up the assets, and keeps the bubble inflated. These prices want to come down. Gravity wants to take over. Let it. Let it. And by the way, if the Fed were to take their fingers off the scale, if they were to stop messing with interest rates, they wouldn't go down. They would go up. So it's not like the Fed is holding interest rates too high. The Fed is still putting downward pressure on interest rates, even though they had raised them in 2022. If the Fed were to just cease all action messing with the markets right now, those interest rates, you better believe they'd be a hell of a lot higher than they are right now. It would be painful, but it'd be the best thing that could ever happen for the average person on Main Street. But again, don't hold your breath. I just throw it out there. You guys do what you want with them. Thank you so much, Break My Wallet, for supporting the channel. Guys, I really appreciate all the generosity in the super chats. Thank you so much for everything you guys did for the channel. Hey, don't forget that like button and that subscribe button on the way out. Also, shout out to my magnanimous Melonhead members on YouTube and Patreon. Thank you guys for everything you do for the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.